Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.
Timing is everything. This is Paul Harris with Kitco Mining at the 2020 for Gold Forum Americas in Colorado Springs in Colorado in the USA. Joining me today is Stephen Dean, President and CEO of Artemis Gold. Stephen, welcome back to Kitco.
Thanks, Paul. Good to see you.
Now, Stephen, you are getting close to completing the development of one of the most exciting gold mine developments in recent times in Canada, and that's the Blackwater Gold Mine in British Columbia. How much of the development is complete? When are you expecting to pour first gold?
Well, we're still aiming to pour gold in Q4 of this year. Our last quarterly update, which was the June quarter update, had us in the high 80s of completion, and obviously we've progressed since then. So we're getting awfully close. We've had lots of cost pressures. We've had wildfires, evacuation orders, all sorts of challenges thrown at us, and that's why it's hard to do what we do, but we're getting awfully close.
Now, you're building this at a moment of time when there's been quite a bit of mine building in Canada, Greenstone, Côté, some other projects as well, but you've managed to keep Blackwater on time and on budget, which is not something all of your fellow mine builders can say. What has been the secret to your success there?
Well, I think we're fortunate to have a really, really strong team who have deep experience at building gold mines around the world. Our President and COO, Jeremy Langford, has built 6 or 7 mines, I think, and counting, over the last 15 years or so. So I think just having the experience in dealing with the inevitable challenges and managing cost pressures and managing budgets is key.
Okay, now initially Blackwater will produce 250,000 ounces a year of gold, later growing to 400,000 ounces a year. The 2021 feasibility study featured a 2-year payback period with project economics calculated with a $1,600 per ounce gold price. Now gold is at $2,600 per ounce. What impact will that higher price have on the project?
Well, in March of this year, March 2024, we issued an updated optimization study, which really was responding to a few things. One, the increase in inflation and therefore capital and operating inputs since that 2021 date. But it also was responding to the point you're making, meaning a higher gold price. And I think that March study, if I recall correctly, was done at around 1,900 gold, a little higher than the 1,600. But today, as you know, we're enjoying prices north of 2,500 US, and that translates at the moment to about a $3,500 an ounce Canadian gold price. What does that mean? I think it means that we have to remain focused firstly on getting phase 1 into production and at commercial production level, but it also makes it easier to justify fast-tracking our phase 2 expansion. So I think you can expect us to make some announcements and commentary on the timing of that expansion or the commencement of that construction, probably in late Q1 or early Q2 next year.
And what is the capital cost for the phase 2?
Phase 2 is around 580 million Canadian or thereabouts. And our plan would be to manage that and fund that through cash flow. And
2,600 gold, I imagine that becomes more and more achievable with every passing day.
It does, yeah.
Okay, beyond the phase 2 expansion, are you starting to think about what comes next for the company, for Blackwater? Single asset producers always have a certain vulnerability, whether that's for unsolicited M&A transactions or, if something breaks, things can go south very, very quickly. What are your thoughts about what's next for the company once phase 2 expansion of Blackwater is underway?
Yeah. Firstly, I think we're in a bit of a fortunate and unique position in that insiders, meaning management and board, own on a fully diluted basis about 38% of the company, which means that we've got effective control of our destiny. And in terms of M&A generally, I think it's still a show-me market. I think there is still a disconnect between what we're seeing in terms of increases in commodity price and the underlying equity valuation. And maybe with this last run up in the gold price, we might see some correction to that. I think the key to that, addressing that disconnect in value, is probably lies in a more predictable performance by the majority of the companies in the sector, hitting guidance, hitting the cash flow projections that we as a sector promise. And that will encourage some of the generalist investors, which will in turn maybe close out that gap of disconnect between the rise of the price and the rise of the equity market.
We're at the Gold Forum Americas. Imagine you've got quite a full meeting card. Who are you having meetings with? Are you starting to see investors soliciting meetings that you haven't spoken to or heard from a while?
Yes, in some respects. We're also seeing specialist investors with who are seeing the initial movement of gold inflows, fund inflows. And yes, there does seem to be a few more generalist investors at this conference.
Now, we're starting to see more M&A as well. We've seen some interesting deals recently with Goldfields and Osisko Mining, more recently AngloGold Ashanti and Centamin. What are your thoughts, both as Artemis as a potential takeover target for somebody else, or Artemis looking to add to its pipeline through acquiring other development stage juniors?
Yeah, I think I've always said this to you in our previous meetings, but we remain very focused on delivering the things that we are committed to. Phase 1 commercial production is the first and near-term goal. I think we are still relatively undervalued, so that makes M&A harder to rationalize. With the closing of valuation gaps between the equity market and underlying value, I think you might see some increased activity. As I mentioned earlier, I think as the sector becomes a more reliable generator of consistent cash flow, free cash flow, that will entice a broader spectrum of investors into the space, and we'll see that closeout, which often will lead to M&A. What I do know is that as the owner of one of the larger development assets and near-term producing assets, that category of company is becoming more and more rare, as you point out, because most of our peer developers have been acquired or being acquired.
Your share price is up more than 100% year to date, so your paper does seem to be appreciating quite nicely as you get closer to pouring that first gold.
It does. It is performing well, but the analysts who cover us tell us that we're still trading around 0.6 or 0.7 of our NAV, so there's still some room to go.
I think one thing that's interesting, and if you permit me to be a little bit cheeky, Stephen, your market capitalization is now higher than New Gold's, the company you bought Blackwater from, and New Gold is a producer. Could be quite interesting if you made a bid for them.
I think New Gold's a fabulous company, and they've got some recently announced good results on a number of fronts, and like the rest of the sector, I hope they do well.
Now, in terms of the overall trends in the gold space, what are the things you're looking at most or paying most attention to?
Trends?
Yeah.
Well, the trend that is there almost always in our sector is that by definition we are the asset base of our companies are depleting every day we produce more ounces, and so growth remains, internal growth as well as M&A growth remains an important part of our business, and if you have the right assets, you should, and assets that are large scale in good jurisdictions, like we're fortunate enough to have, then there's always going to be interest in our space and interest to drive growth through both organic as well as inorganic means.
Okay. How do you think the rest of the year is going to play out in the gold sector amongst the gold companies?
Well, as I said earlier, the performance to guidance on production and costs is going to be under the microscope, as it always is. But I think we've got a better chance of that this time around. If you think about it, post-COVID, as an industry, we were enjoying a higher gold price, but we were also battling cost inflation, significant cost inflation. So the much vaunted or promised free cash flow generation was achieved by some companies, but not by most, because of the inflation pressure. I'm feeling in our business, and I hear in our peer group sector companies that inflation is not so much of a factor. So that margin, that expanding margin against a high gold price, may well be delivered this time around, and that will bode well for the sector.
Well, fuel prices have been coming off, and so it does look like there's going to be sort of 2 or 3 quarters of lower fuel prices and therefore lower costs during expanding gold price. So margins could grow quite considerably, and obviously free cash flow as a result of that.
Labor pressures are not as tight as they were. So I think we're seeing costs across the board, lower inflation. So hopefully we can increase that cash flow margin and deliver that cash flow generation that I know we're capable of as a sector.
Well, let's hope so. And Stephen, good luck with the rest of the build at Blackwater. Stephen Dean, thank you very much for joining us today.
Thanks, Paul.
We have a lot more to come from the 2024 Gold Forum Americas, so hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.